to remember. But when everything is coming back to me, I feel as if my memory is paralyzed.
Now let's see. What is the last thing you can remember?
I don't know.
Go on.
Good evening, ladies and gentlemen. I am Dan Theox, Senior Vice President at Mayberry Investments Limited, and I'm your host for this evening. I'd like to welcome you to our weekly investor forum. Firstly, we apologize that MailPak's investor briefing has been postponed, but rest assured that we will be bringing you that investor update in the near future. One way you can stay up to date is by following us on social media, and I encourage you all to post your questions on social media and to tag us with the hashtag #MILInvestorForum. If you enjoy this program, be sure to like, share, and subscribe to our YouTube channel. Today we'll be doing things a little bit differently, as we'll be having a discussion with our very own Chairman, Christopher Berry, and our CEO, Gary Parrott, who will join us later. We'll be discussing our market segment on foreign exchange and our expectations and outlook for the second half of 2021. But first, let's just jump into my top stock pick of the week. Sorry for being tongue-tied with that, guys. Excellent. Well, I may have a list, but I think I got the numbers right. So FosRich Company Limited, that'll be my first pick of the week, pick of the year, quite frankly. And I'll tell you why. So first of all, we all know what FosRich is because we, in fact, hosted Cecil Foster here recently on our program. It's a great company in the energy services area. We talked about how they recently, last year, went into the production of PVC pipes, and also last year signed a new 4-year contract to build and repair transformers for JPS. Of course, that production has not started as yet, and so we look forward to them reaping the benefits of producing transformers and repairing them for JPS. But just a quick outlook. Today the stock is at $5.25. That's a PE of 21 times in a market that has an average of 24 times in the junior market. And you might think at 20 times that stock is at fair value, and that would be a good assumption. But the trailing earnings are only $125 million, and I'll talk a bit about that, so just pay attention to that trailing earnings of $125 million. On the next slide, we do a little bit more where we show you how the business has performed. So $1.9 billion turnover, again, net profit of $125.75 million, $3 billion in assets, $870 million approximately in shareholders' equity. And so it's a well-capitalized business, good asset base. In their most recent earnings update, they showed 18% improvement in profitability, and that's important to note. And in fact, when you look on the next slide, what you'll fully appreciate is the type of earnings they've made in the last 2 quarters. So remember, still haven't rolled out fully the transformer repair business, but in the last 2 quarters alone, they've averaged about $50 million of profit per quarter. So $125 million trailing earnings, but if you take the average of the last 2 quarters, which is $50 million, and do some forecast as to what you think the projected earnings could be going forward, then you get $200 million. So $200 million obviously is quite a bit better than $125 million, and that's why I like this company. I think the growth's definitely going to come. That PE is going to come back down to 12 times. The stock price will fly again to get back to a PE of about 20 times. That's what I would expect as it relates to FosRich. Next one, Lumber Depot, before I bring in Chris and Gary to get any comments that they may have. Lumber Depot, again, a company we've talked about before in the past. Here again on this slide, you sort of see how that stock has traded. And you might be inclined to think, hey, I missed the rush. This stock has moved from $2 to $2.69. It is up perhaps 35% this year. And you might be inclined to think I missed it. But I'm here to tell you, you have not missed an opportunity that is yet to come. So once again, it's trading at a 20 times PE in a market where the average is 24 times. And I would be inclined at first glance to say the stock is at fair value at 20 times. But once again, if we move on to the next slide and we start to do a little bit of a deep dive, you start to appreciate why I think there's more to come. So again, in their last results that came out, we saw that their profitability improved quite a bit. The net profit grew to $100 million in their January 9-month ended period compared to the previous period, and that's 55% growth in their third quarter as well. So we're seeing growth in the business. And again, if we move to the next slide and look at, hey, what does this growth look like? Here we go again. $35 million average profitability in the last 2 quarters. So again, trailing 4 months earnings is $100 million, but they made $70 million just in the last 2 quarters alone. And pay attention to that first quarter in the last 4 quarters where they actually lost $15 million. That was when they, shortly after just coming to market. So here's a business that's about to take away that $15 million negative quarter and add to it maybe a quarter of, say, $35 million. And you can very clearly see that the $100 million trailing earnings is about to become something substantially better. $35 million per quarter times 4 sounds like $140 million of earnings going forward. That's 40% better than they've done to date. And it's another reason why I think that stock price could potentially jump by a further 40%. Let's hear from Chairman Berry if he has any thoughts on any of my picks, whether it be Lumber or FosRich or any other comments.
No, Dan, I'm going to stay on the sideline for now.
I appreciate that. But thanks for joining us. We'll be talking a lot more as the program goes along. Mr. Parrott, how about you? Will you be a braver man? Any comments in relation to my 2 picks? You're muted, Gary. You're muted, Gary.
Sorry, one of the common themes I'm seeing, Dan, is that those companies that you're speaking about seem to have the ability to maintain a growth rate that's similar to the PE. So I think Lumber Depot has the potential to continue increasing its profits higher than 20%. So I mean, obviously, if management makes the right moves, etc. So that's the common theme. Even though they have a relatively high PE, they have the ability to keep generating profits to substantiate that PE of 20 times.
Absolutely, and I feel that way wholeheartedly in both cases, particularly with FosRich, where we have to declare interest in that. We are working with them to help grow that business, and again, we remain confident of things to come. And again, we had Cecil Foster here, and he talked about the new warehouse space and the new subsidiary and the fact that they got their special economic zone approval and how they're looking to move the PVC business out there to double that business and start up the transformer repair business. I'm excited about the future.
And I share, to add that, I share the excitement from the perspective of the alternative energy space, especially solar, will have significant opportunities. And when you speak to the head of FosRich, I mean, he can't get enough cash to try and follow up all the opportunities that are out there. And he's basically trying to get cash to take those opportunities that gives him the best return. So, you know, if he's able to extract those returns and continue generating and increasing more cash in the business, he has almost an infinite amount of opportunities to cash in on. So this business could grow at a sustainable rate for a very long time.
Absolutely. I really feel that way, and it's tied to the construction industry, and we see how construction is booming, how housing is booming. You know, it's amazing, quite frankly. So I think both businesses actually are tied to construction. I didn't even think of that before. And they've shown that they're COVID resistant and resilient and actually moving and growing. So I'm excited about both of them. Thanks for your comments, Gary. As we move along in our market segment, we'd like to look at the top decliners and gainers for the week, starting with the decliners. Firstly, G West, down 12%. 138 Student Living, down 9%. Palace Amusements, down 8.5%. 1834, down 8%. And Trans Jamaica Highway, down 7.5%. And for the gainers, we have Siboney, up 33%. Medical Disposable Supplies, up 14.5%. Dolphin Cove, up 14%. Key Insurance, up 8.8%. And X1 up 5.87%. So that rolls out our gainers and decliners for this week. Moving further along in our market segment, we'd like to talk about foreign exchange. This is something Chairman Berry likes to talk about as well too, and we'll be bringing him in a second. So this graph just sort of shows the trend over the last 5 years as to the rate of devaluation. And what you're going to see here is the actual combined annual growth rate or devaluation rate in the last 4 years has been about 3%, starting with a small revaluation of about 3% from 16 to 17, followed by 2% devaluation in 18, 4% devaluation in 19, and then a larger 7.6% devaluation in our COVID year. But when you look at that 5-year running, it's really just a CAGR of 3%. And then on the next table, we sort of show the devaluation further since December 2020 to now, 2.9% devaluation in the last 2.5 months, which means 12-month rolling, we have a devaluation rate of about 8%. Chairman Berry, you talked about not chasing the dollar when we saw it touch 150. We've now watched it over the last 3 weeks revalue to 146.78. How are you feeling about the exchange rate? What's your outlook? What are your thoughts?
Yeah, so I think the important thing to note based on the last statistic you put up about the devaluation since December is that a few weeks ago when we showed that it was all the way at 7% and now it's coming back quite a bit. My feeling is that anywhere in the 146s, 147 is a good place to trade, to go along or to fill your orders or your commitments that you need to look about. I don't see it going much below where it is now.
Great. I think that's pretty reasonable. And again, I think when we put it into context, you know, and you hear it's only a 3% CAGR over the last 5 years, I think that makes sense. Gary, any comments or thoughts from you?
But before moving on, Dan, I
of
think
course, Chris.
the important thing and the message that I want to send out there is that, you know, if you want to know what to do, right, then you have people like Mayberry. We're in the market every day. We can save you money. Don't just think about what you're buying the exchange rate at today, but also think about when over a 2-week or a 3-week period you want to buy, because, you know, a couple weeks ago it was trading at 152 and now we're at 147. So that's a $5 movement, and that would more than have compensated any client for whatever commission any trader would have charged them. So you need to have someone who can do more than just put dollars in your hand. Somebody who is looking at the market and understanding where the potential highs and lows are, what are good buying and selling points, so that you end up making the right decision.
Absolutely. So, at Mayberry, we really do focus on the advisory side of the services, and I'll give you two real stories. 2 weeks ago, I was trying to buy 30,000 for a friend, and I told her, Althea, let's hold off a bit. I don't think we should buy this at 150. She grew a little impatient. We watched it for about a week, and she said, I can't wait anymore, let's convert. The following week, the dollar revalues to 146. We smiled about that, as opposed to a corporate client who had to park $767,000 into an escrow account, and they sent over the money at 150, and we said, let's hold off on this trade. And we did the trade today and saved them literally 18,000 US dollars on that conversion. So I totally agree with you, Chairman, that it's really important when folks are out there in the market to have an advisor who isn't simply trying to make you buy dollars or to make a buck off of you, but who's giving you actually advice and looking forward into the market and trying to help you structure deals in a manner that's beneficial to all of the parties. Gary, like to hear from you on
Dan.
FX.
So, it's interesting just to follow on your point, because there are so many variables in the market for people to follow. And to get that information, you need to be plugged in different ways. So again, whilst the dollar is trading around the 146.50 region, and whilst I think most models would suggest that the dollar should be trading higher, it's very likely that the dollar can trade lower, primarily because we're going through tight Jamaican dollar liquidity. So what you have had happen is that a lot of corporate companies and individuals should be paying over their taxes on March 15. That deadline was extended to March 31st. So between now and the end of March, you're going to have a relatively tight liquidity because of that. And I think that will keep a lid on how far the dollar could potentially devalue up until that point in time. I think it possibly could trade lower, meaning less than 146 before it goes higher. So the key is that I think any amount of Jamaican dollar liquidity that comes back into the market is going to move the price higher in terms of 146 and above. But until then, I think you're going to see trade sideways and maybe slightly down before it goes back up. So again, just following on your rhetoric, so I agree with Chris, I agree with your point. But some people, you can't just look on the current account deficit. You can't just look on the deflation numbers. You can't, there's so many different things that you have to roll in at any point in time. So it comes back to your point about having a financial advisor, because they're paid to get a better understanding of what is happening. My concluding remark is that you're seeing, certainly with this government, this finance minister, this Bank of Jamaica, they call it inflation rate monitoring, targeting, whatever they call it. But long short for the common man is that you see more volatility. And what that means is that more businesses, more individuals should try to get a better understanding of finance, not just accounting, but finance. And if you do that and you introduce that into your business, I think your business will do a lot better, certainly on the purchasing and selling side.
Thanks for that, Gary. I totally agree. And I think we'll talk a little bit more about some of those points as we move on to our outlook section, and we talk about what our expectations are for the second half of 2021. So I think this is sort of a complete picture of the 6 main points we'd like to discuss. We talked about the exchange rate just now, and I think the insights from Chairman and from Gary were quite meaningful. And I'd like to talk a little bit now about the NIR, and then we'll move on to cover expectations in relation to tourism, the equity market, and so on. So in terms of the NIR, I do want to note that the government's done a pretty good job of managing that. So we started last year, March, with roughly, beginning of the year at 3.1 billion US dollars, and we've pretty much managed that reasonably well throughout a really horrific time, a pandemic that no one could have expected. And here we are with the NIR at $3 billion. So literally, very small decline, approximately 4%. We can see how the NIR in this graph was run down a little bit throughout September and how they've managed that back up. I think they've done a pretty good job there in terms of managing their reserves, and also at the same time, when we look at the performance of the dollar in recent weeks, this revaluation that's come, I think they've done a pretty good job of managing this balancing act. Chris or Gary, any thoughts about the NIR before I move on? Good deal.
I don't have much to say on it, Dan. That's more the role of an economist. But I might have a little background in it. But, safe to say that, most people think the NIR balance is pretty high. And the question I've heard people say is, if you have so much NIR, why don't you use it more judiciously? But again, that question is probably best left to be answered by, the central bank governor and his team.
Agreed. And of course, I was only looking at it in absolute terms. If they speak to the NIR in terms of weeks of supply of imports, it sounds like it's 30% higher, only because the supply, or the demand rather, is down by 30%. So in terms of weeks of supply of NIR, it's probably at an all-time high, you'll hear the Minister of Finance say, but in absolute terms.
Well, it is, but it is what it is.
Yeah.
I mean, that's how the metric is run. And, on the face of it, it's significantly more than what the minimum should be, So, but again, there are pros and cons associated with it, but let's see how the central bank governor and his team deals with it.
Excellent. And Chairman, any thoughts? Good deal. If we go back to the previous slide, of course, we're going to...
Dan, I only go back to when we started this whole talk and focus on the NIR. We were told that Jamaica needs 12 weeks supply, and how many weeks supply do we have now, Dan?
40.
Yeah, so, I think we have a very strong NIR based on the metrics that we were given. Like Gary, I'm no economist, so I don't have any way of saying, hey, 12 is enough. But the fact that we're 1 year into 100-year pandemic, 100-year event, and you still have 40 weeks of NIR, I think, you can't fault the BOJ as far as that's concerned. They're doing a great job.
I totally agree. Moving on into the conversation, because they're all interrelated, exchange rate, NIR, tourism. Chairman, I'd like to get your thoughts for 2021. How are you feeling about the outlook for tourism? I know we're going to have the experts at month end, everybody. We're going to definitely have a great discussion at month end, where we hope to have the Minister of Tourism himself, Ed Bartlett, along with some special guests, some very special guests. But until then, Chris and Gary, I'd like to hear your thoughts on outlook for tourism, and again, how that ties back into GDP and exchange rate and all like that.
So Dan, from my perspective, in the U.S., they're doing, our major tourism market for Jamaica is the U.S. by far. Everything else is small. The U.S. is doing 2 million people a day right now. So by the summer, we should be in a position to have serious uptick in tourism, and that should continue as time rolls out. I think though we have to remember that this is a virus, and viruses do mutate. So that's something we have to think about, which could be negative. But I think the biggest thing that can stand in the way of a strong recovery for tourism would be the logistical side of the COVID effect. And logistics, what does that mean? Don't be surprised if a lot of airlines start talking about COVID passports and needing to be vaccinated. A lot of the aircraft have been parked for a long time. Pilots are out of training, and getting that whole infrastructure to start to work the same way it used to, 2 years ago, it's not going to be overnight. So there's going to be a lot of hiccups. And that's going to be the constraining factor. At CPJ, for example, we are the largest purveyor of food to the hotel industry in Jamaica. And what we have seen is tremendous disruption in the supply chain. Prices of all the things we sell to our clients have gone up. It's crazy. Some of the items have tripled in price. And that's changing the whole dynamic. Some of the things that they tell you normally get it in 2 weeks, a month goes by, 6 weeks go by, you don't have it in your warehouse. So the logistical part of getting everything back together is going to be the main challenge and going forward from my perspective. Thank you.
Gary, how about you? What are your thoughts on tourism generally and the outlook for the rest of this year?
Well, I echo some of Chris's points. The first thing is that we're not sure. Last year everybody was guessing that by the first quarter of this year we'll be fine. We finish in the first quarter, and it's still not moving. I think the positive on the horizon, as Chris indicated, that the U.S. is vaccinating 2 million people a day. President Biden is saying that he's looking forward to Independence Day, July 4th, to remove restrictions. So obviously there are a lot of cabin fever in the U.S. and the expectation is that a lot of those people are going to want to travel. But what could be included in that logistics issue that Chris referred to is also on the financial side. So a lot of these businesses, a lot of these hotels had cycles where you would buy stuff with 120 days or 30 days payable cycles. So to start back up, a lot of these suppliers are going to want cash. Cash translates to capital for some of these existing hotels. Locking up a room for a year is not just a simple thing just to open it up and put people in there. You might need to repaint it because you didn't have the humidity was different. The furniture might have cracked. So one of the things, the feedback I'm getting is that there is going to be a significant amount of capital that's going to require to restart some of these things. Now that is going to be in addition to the capital that was borrowed to survive until this point in time. So there's a lot of X factors there. But from my perspective, I think you should start to see things turning around at the very least by the September quarter. Hopefully, if you have a reasonably good winter, then the engine should be running and humming really nicely in the first quarter of next year. But I conclude by saying this to you, Dan. People tend to look on the tourism industry as just an earner of foreign exchange, and that's just it. What people don't realize is that, whilst you earn foreign exchange, it also comes with significant imports. So it's not just a one-way stream where you're just going to get $10 worth of foreign exchange. You're also going to bring in a lot of imports, which can impact on the dollar in and of itself. So, it's a matter of how that is managed, how we get the capital. But, we've come this far. We still have 40 weeks of NIR. All the people are now in a wait and see. Everybody's been talking about keeping the cash burn low, which they have been for those who have survived. And, I think a lot of the local companies are in a position that when it comes time to ramp back up, I'm willing to bet they'll find the necessary capital to get it going.
Absolutely. And we spent, folks, a lot of time talking about tourism because, Jamaica depends on tourism. So we talked about the foreign exchange earnings. We talked about jobs, which is huge. And so our recovery is inextricably tied to the success of tourism. And so I do want to encourage all of us to support it where we can. We have certainly seen at Mayberry, and we know that's happening out there, a lot of restructuring of corporate notes and bonds for folks who, as Gary alluded to, needed to restructure their refinancing to give them more runway and to allow them cash to survive. And then there's some folks who are going to need additional capital to, as Gary said, ramp back up to get going again. And so we absolutely have to support the tourism sector as best we can. That's going to be very important.
So
Also,
two last things on the tourism, Dan.
Sure, Chairman.
I think for us to also take advantage of the restart of it. Jamaica has to be seen as a safe destination. So we have to do a lot of work on making sure that our Jamaicans that are serving the tourists and our government officials that will be front facing, that's customs and immigration, that they're all protected from a health standpoint and people feel safe interfacing with them coming into Jamaica. Also, you know, the taximen that carry around the people on the North Coast, all the hotel workers, all of these people are very important, and people want to be feeling that they're going to a safe destination. And also, there may end up being protocols around what people are calling, you know, the COVID passport, where you have people who are vaccinated having some special designations, and that may require software. So we need to find out, make sure we're up to date on that, and you know, if there's some protocol, that we have all those protocols in place locally, so that we can benefit from the restart.
Good points, good points. And as it relates to the tourism sector, we spoke about vaccination happening in the US. You've implied it in Jamaica. Obviously, we'd like to see the tourism sector getting some priority in terms of vaccination. And I absolutely want to encourage everybody out there to support the vaccination effort. That's another logistical challenge we will face, our ability to roll out the vaccines locally, because that's going to be important as well too. But I totally agree with your points, gentlemen, that most of our traffic, 80% of our tourism comes from North America. I believe that traffic is going to be ready to start moving again in June, July, and we have to prepare ourselves to start receiving that traffic. And hopefully within 6 months of that, we can see ourselves ramping up back to somewhere near normal levels, and then within a year of that, getting back to full normalcy is what I would guesstimate. How about the equity markets, gentlemen, in terms of our outlook for the rest of the year? Can we talk a little bit about the equity markets and get some thoughts from you on how you feel about the market performing for the rest of the year? So we know last year was a horrible year for the market. Quite frankly, the market was down roughly by 25%. We've seen a little bit of recovery in the last 2 months. How do we feel like the performance is going to be for the rest of the year? Let me start with you first, Chairman, if you don't mind.
Yeah, so Dan, my feeling is the market's actually done a lot better than I thought it would have done. I think it's doing great, considering what we've been through. So I'm very happy with the performance of the market. And normally in past cycles, people were more willing to really bail out of the stock market in a major way at the first sign of any disturbance or disruption. And I'm actually surprised at how many people, you know, are still sticking with it. So we're doing good.
Excellent.
We're doing good.
Excellent. And Gary, what about your thoughts? So, for the rest of the year, what sort of expectations do you have generally for the market?
I mean, if you look on the performance since the start of the year, it's been pretty strong for certain companies. I think you might see a flip in terms of the companies that are doing better for the rest of the year relative to last year. So I think a lot of the food distribution companies have done very well. They got that COVID bump. You know, the big question is that as we move away from COVID, will they be able to sustain that? As the COVID fears start to subside, I think you're going to see more of the companies on the market start to deploy capital to restart the engines. You know, so I think the peripheral companies, I believe, you know, still have some juice left in them. For the headline companies that was doing well last year, I think they might just trade sideways, maybe pull back slightly. I think the market would come fully back to pre-COVID levels once we can deal with the issue of the banks from the perspective of, I think the moment you see the central bank allow the major banks to go back towards paying their dividends, I think that is going to be the signal that, you know, we have come through the worst and we are moving back to normalcy. I think that the day that comes, that the banks will be allowed to pay their dividends, I think a lot of that cash, because I think those institutions are going to pay with a special, pay it out as a special dividend, but more importantly, pay it out at one point in time. And I think that is going to create an environment where there will be more funds to reinvest, not just in those banking stocks, but in other stocks in the market. So in short, that's my signal that would say that, hey, we're back. As to whether it's going to happen this year, not too sure. I think it's going to be a function, as I said, of how quickly the vaccinations are done. And, tourism is back, and the locals as well. So whilst you have the local vaccination program, there are people who are getting vaccinated going to other countries, etc. So that signal, once that happens, I see the market doing pretty well. But until then, those non-traditional companies, I think people are starting to look at them to see that, once the market comes back, they're going to jump immediately to where they were pre-COVID. And if you look on a bunch of those stocks, that's a lot of 100 and 200% that can be made.
Good, I appreciate that. It's a good perspective. I mean, when I think of the four largest banks by profitability, results were reasonably flat to challenged, and then they have on top of that the dividend restrictions. So from the banking sector point of view, I agree that's a substantial point. And then my last comment as well on the outlook for the equity markets is the tourism stocks. There quite a few of them, at least four, values are quite depressed now. And next week I'm sure one of my top picks will be one of those tourism companies. I think there's great potential for growth over the next 6 to 12 months in tourism, and for these companies that are tied to tourism who we think are going to come back out on the other side stronger and better. I'd like to remind you that if you're seeking to expand your portfolio or embark on your first investment journey, Mayberry Investments can guide you in achieving your financial goals. Follow us on social media and visit our website at www.mayberryinv.com to learn more. And our social media handles should pop up somewhere on the screen. So I think we have a few social media questions in this week. I'd like to take a few of those questions if you gentlemen are prepared to help me. And the first question is, what sectors/industries should investors look to invest in as our economy recovers? So I think we covered a little bit of that just now, but Gary, how about you help us out a little bit in terms of what sectors or industries folks should look to invest in?
So I'll repeat the question, Dan.
What sectors or industries should persons be looking to invest into in the future?
In the market right now?
Yes, sir.
Well, depending on your risk profile, I think the tourism companies, I mean, if you time it right and you believe that they're not going to go bust, I think they hold the greatest potential for capital gains. Playing it safe, the food distribution companies are going to continue to do well. They're generating a lot of cash. So that's a safe bet in terms of an industry. I alluded to the financial services sector. I'm of the opinion that the moment that dividend restriction is listed, all of those institutions are going to pay out massive dividends, because it's now a year and a half. I think the latest restriction has been rolled to June, and so if you start investing in those companies, whenever that restriction is lifted, I mean, you can look at for a very big dividend. Even if it doesn't happen in June and it's rolled to December, I'd be surprised if it passes December of next year. So it becomes a timing play. The level of profit that these financial institutions make, the risk that the BOJ, I believe the BOJ sees, and a lot of people see, is potential non-performing loans. So as we get to the back end of the pandemic, they make so much money that I don't think the non-performing loans would be that material. And so I just think it's a nice play, because a couple of the banking stocks have been beaten up. So you can get capital gain and you're going to get a potential nice dividend payoff. So those three sectors, are sectors I think you should start looking at to determine when you can take a position.
Thanks for that, Gary. Next question asks, what are your expectations for the foreign exchange rate in 2021? I think we alluded to that, but Chairman, let me ask you, what are your expectations for the FX rate for the rest of this year?
So if you asked me this question 15 years ago, 7 years ago, this year, I give it the same answer. Based on how our financial system is set up, the dollar will devalue. How much? I don't know.
I'm with you. We'll move on to the next question. Again, in that chart, I think it's interesting to note that the combined annual growth rate or the devaluation rate, again, over the last 5 years is averaged at about 3%. And so sometimes you get a little bump, sometimes you don't. But I think that trend likely would hold. A lot depends, again, on the new budget. And we just saw, for instance, and we can talk about this, guys. Oh, look at that. It's a question. What is your take on the government taking dividends from BOJ? So that's about $33 billion. So it's a good point that the government's got a new budget where they're taking a $33 billion dividend out of the central bank. Chairman or Gary, what are your thoughts on that?
So my thought on that is that it doesn't really matter, because when the BOJ makes massive losses, the government has to underwrite it. And so if the BOJ makes profits, the government should benefit from said profits. It's neither here nor there.
Okay, you're indifferent. It makes good for balancing the budget, though. Gary, what are your thoughts on the budget and this dividend issue in particular?
My view is that, I've always seen government as, using your word as an accountant, the consolidation of accounts. So what you find, you have all of these different government agencies that have different pots of cash. The biggest pot of cash is the NHT, because that no longer becomes a discussion point, but the government is still pulling $11 billion a year from NHT. And I think what needs to happen is that we need to stop saying, hey, okay, this money's over here for this purpose, because when there is an excess or a surplus, it's going to be called upon. Yeah. And so, like Chris says, whether it comes from point A, point B, or point C, it's available. So let's use it and use it for the best resource. But ultimately, we do know that these agencies generate cash, right? And there are other agencies out there with cash. So let's bell the cat. Let's create, for want of a better word, a central treasury that all of that cash goes into. So we as analysts on the outside can analyze and say, okay, fine, this is exactly the position, and these are the things that can be done with that cash. Because in the same way they pull 11 billion from NHT, could it have been increased to 12 or 15 or 16? NHT is the most capitalized financial institution in Jamaica. So they're not building houses at a pace to really use that cash. So do we come to a point where we say, okay, guys, this thing is overfunded. Let us change the structure of it, because these resources can be used in a different way without being hamstrung by the trust deed of NHT. So at the end of the day, we're in a pandemic. Wherever we can find the cash, because that's what happened the last time. NHT had the cash and we had to pull the cash because it's going to benefit us all as Jamaicans. So fundamentally, neither here nor there.
And I want to make another point on it, Dan, is that, we also have to put it in perspective, right? So the BOJ has a $3 billion NIR, right? Plus more other monies. And NHT is like so huge, it's crazy, their balance sheet. Little Supreme Ventures paid in $8 billion into the government's coffers in 2019 and 2020. So, if we had more private companies that's generating surpluses, Jamaica would be doing good. And I think that's where we need to focus, because we've been focusing on this, using government as the engine of growth for 58 years. It's not been working. And, $30 billion from BOJ, is it a lot of money considering how much money BOJ is sitting on? 8 billion from NHT, is that a lot of money? I don't really. I think we need more strong companies in Jamaica, more private companies. Government needs to focus more on, providing basic services to the people, and let the private sector run the economy. Jamaica will be a rich place.
Well, I think that's a great note to end the forum on today. Chairman Barry, Gary, our CEO, thank you so much for your insights. I think it has been very useful, very encouraging. Folks, I want to encourage our viewers out there, thank you for being a part of our weekly investor forum. I'd also like to thank my fellow panelists, Mr. Barry, my chairman, and Mr. Parrott, my CEO, for their participation in today's discussions. We're certainly looking forward to having yet another insightful discussion in the upcoming week. We'll be featuring Mr. Iago Castro, General Manager of Caribbean Cement Company next week, another company that supports the construction industry. So we look forward to that. So be sure to follow us on social media to stay up to date with our live streams. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you all to our viewers for tuning in today. And as Gary always says, keep safe and remember, wise investors, slow and steady wins the race. Goodbye.